Hello, I'm Kirk Hanson, Executive Director of the Markkula Center for Applied Ethics at Santa Clara University. We have with us today Carson Block. Carson is the founder and research director of Muddywaters. Muddywaters is an independent research firm which researches particularly companies that are Chinese or have been operating in China. The company, Muddywaters, invests along with its research and has been known to short the stocks of companies that it feels are not on the entire up and up and may be fraudulent. Carson is a lawyer, went to Shanghai originally to work with a law firm, became an entrepreneur, founded a company in Shanghai, has returned to the United States, founded Muddywaters, and is much in the news. Carson, we're delighted to have you with us.
Oh, thank you very much.
Well, you have extensive and unique experience, both in China and here. I'm interested with your experience with Chinese firms. Are the ethical standards and values that Chinese firms operate by, are they different from what we might find typically in the United States, and in what way?
Well, in terms of public companies, what I've often said is that what we've seen among Chinese companies that are public in the U.S., it's not behavior that's dramatically different, it's just on a much greater, more egregious scale. So
these are like our American frauds, only bigger scale ones.
Bigger scale. I mean, one thing that is different is you'll have these companies that are really essentially worthless in China, and do maybe $3 million a year in revenue, but come to the U.S. and report $300 million in revenue. That we don't see much among U.S. companies, but the conflicts of interest, the related party transactions, paying the executives and board members too much, cozy relationships with the auditors, these are all present in China, and they are present in the U.S. They're more egregious in the China space, though.
Interesting. So from your research and your investing, what kind of companies do you like to invest in through Muddywaters or short?
Well, with Muddywaters, so far we've sought to identify companies that are frauds. In my view, there's no better payback for your money than shorting a company that you know should be worth a lot less. In many cases, the companies that we've shorted are really what we call their zeros. So, so long as, especially when you are able to communicate your view to the market and explain what's wrong with the company, then that's first of all, it's from a business model perspective, it's very good. But we also like the fact that we are protecting future investors from these frauds, and we are to some extent punishing the people who are committing these frauds,
and punishing the investors who naively bought the shares.
Yeah, and hopefully most of them learn the lesson and don't punt too much on these things again in the future. I can't say that's always the case, but yeah, sometimes the most effective lessons we learn in life are the hard ones.
And do you expect there to continue to be a market for this kind of investment research and shorting? Is this a short-term phenomenon? Are things going to be less egregious in the future amongst Chinese companies trying to list in the United States?
Well, among the companies that are already here, a lot of them trade at what are clear fraud multiples. So they're trading at PEs of less than 5 times, even though they're reporting year-on-year revenue and profit growth of 30-40%. Clearly the market does not believe them. In terms of new listings from China, it's difficult to say. The Chinese government has, as we put it, made a decision to side with the frauds. So it is very active in trying to prevent the discovery or revelation of fraud among companies that are already public in the United States. It's done this by involving its domestic spy agency, the Ministry of State Security, to intimidate on-the-ground researchers. And it's trying to eliminate access to government files that are by law publicly accessible. Now, if this may succeed in that people in a year or two from now have forgotten about all of the problems with fraud, and so maybe then we will see some more Chinese IPOs coming to the U.S. But I think one of the issues investors really need to be cognizant of is that China's economy by the day becomes more and more, the good parts of it become more and more absorbed by state-owned enterprises. So really the trough for privately owned companies is shrinking. We've seen a lot of IPOs of the better companies in prior years. So automatically you need to be somewhat more skeptical of a new IPO in this environment. It's quite possible that there's a lot of myth to the company, more so than substance.
One closing question that may be a provocative one. Is there room for your kind of research on U.S. firms?
Absolutely.
And fraudulent U.S. firms?
Fraudulent, I mean, we're not going to find too many companies that are zeros, at least within a reasonable market cap. But yeah, there are a lot of abuses by managements of shareholders in the U.S. and to an extent, we have an open question that we want to try to answer, which is if we write research that's critical of the way managements run companies, and effectively try to make the argument that the managements are running these companies primarily to enrich themselves at the shareholders' expense, how would the market react to that kind of research? I think we'll definitely be testing that. May turn out that there isn't such a market in the U.S. for that, but yeah, there are definitely frauds here. So yeah, we're always looking.
Thank you very much
Thank
for
you.
being with us, Carson.
Thank you.